A common mistake that people make when trading is that they'll see a green bar or a bar breaking through a moving average and they'll take a position and then later on end up getting burned. It's a common mistake to make. I've made this mistake in the past and the market can be tricky. In this video, I'm going to show you how you can avoid this mistake and make sure that every position you take is the correct trade. Let's get started. Here I'm looking at SPY, which is the ETF of the S&P 500. I have here loaded on my chart the 15 SMA, which if you've seen my other videos, you know I like using the 15 SMA as a guide point. I'll put the link in the description for that video. But I want to show you the market over the past couple of days. What has it done? It has broken below this 15 SMA. Breaking below the 15 SMA gives us a signal that it could be going down lower. However, because it was in an uptrend already, I wouldn't just get in here. I would wait for a pullback and a continuation lower. But I want to focus on the past few days. Here we have this green bar, then another green bar that breaks the 15 SMA, and then here was today's red bar. Now, if you use the 15 SMA strategy, you could say, hey, why don't we get in here when this green bar broke above the 15 SMA? Isn't that the strategy? No, it's not. Remember, every strategy requires good technical analysis and judgment in conjunction with it. You don't just get in without analyzing the chart. Why would we not get in on this? We would not get in on this green bar, even though it breaks the 15 SMA, because the trend for this started down here. There was no pullback and then a break above. There was no consolidation. It just went and broke the 15 SMA without any pattern. That is not a signal to get in. And you see here now it's putting in this red bar. I wouldn't be surprised if it just came straight back down. So let me contrast this example with the one prior. So look at this example here. See how it pulls down? Then there's a nice consolidation. The market rests for quite a while, gets very close to the 15 SMA, and then puts in this green bar. That is a signal to get in. It had a nice move back to the 15 SMA and then a nice break up above consolidation. This is a move to get in. This, what we have here, is similar to, let me go back. Look at this here. Look at this here. See, the market broke down below that 15 SMA, came down, then all of a sudden just pivoted back up, up, broke through the 15 SMA. If you had gotten in here on this bar which broke the 15 SMA, you would have seen that 2 days later, we were straight back down, continuing the downtrend. Why? Because there was no rest. There was no consolidation. There was no pullback and then a break up. So the takeaway point is when you're using a strategy, whether it's the 15 SMA or some other strategy, make sure you know when it crosses that 15 SMA or puts in some sort of signal where the move is coming from. If it's coming straight from this downtrend and pulling back up, you don't get in here. This is not a pattern to get in, even though it did break the 15 SMA. Keep practicing technical analysis, keep studying those charts, and continue to watch videos like this, and you'll begin to understand how the market movement works. If you like this content, please like, share, and subscribe, and we'll see you next time on Trade Tricks.